We go to Gary Kaltbaum, then Furchtgott-Roth, and Charles Payne. Charles, what is going on? What's to account for the comeback?
Well, we've got a couple of things. First of all, I think maybe something of an overreaction on Friday. And here's what people, in my mind, don't get. It's not about the Fed raising rates 25 basis points. It's about a Federal Reserve that says there's an urgency to raise rates because they're data dependent. Well, what does the data tell us? Manufacturing data has been terrible. Service data has been terrible. The last jobs report was 151,000, well below what they want. We revised second quarter GDP lower. Auto sales obviously have peaked. So what exactly are they looking at? What inflation? What urgency? So if the Fed were to hike rates against that backdrop, the little bit, the razor-thin credibility that they may have in certain quarters on Wall Street would evaporate. So I think that was what it was all about. Dennis Lockhart spoke this morning. I think he tried to smooth things over a little bit. And, of course, we got another speech coming at 1 o'clock.
All right. You know, Diane, if you look at all of this, the prevailing wisdom seems to be that every time it looks like the Federal Reserve could reverse course or at least speed up the course and move up on interest rates, the markets have a tantrum. And when the markets have a tantrum, the Fed then eases back. What do you make of that?
Well, I think that's true. They should have started a long time ago, back in 2011, and they've been delaying and delaying. They have passed every single metric they set for themselves. Ben Bernanke said when unemployment rates were at 6.7, the Fed should start raising rates. Now unemployment rates are about 5.9. And the problem is that the Fed isn't going to have any more ammunition when we go into the next recession. And gross domestic investment is down. GDP is about 1%. And there's a very real concern as to what's going to happen in the future as growth keeps on slowing.
You know, Gary, you've always told me the market's a bore uncertainty. If I can extend that to politically what's going on, last week when I was talking to Mark Cuban, he was saying the uncertainty of a Trump presidency or him getting elected or even improving in the polls would lead to a sell-off. Even for him, it wasn't a right or left argument. It was, we don't know what to make of what's coming argument. How has the Hillary Clinton issue and her pneumonia and maybe questions about her health changed that equation?
Well, look, there's a cottage industry right now saying that if Trump is winning or Clinton is losing, the market's going to crash. I don't know where this came from. Both of these candidates have not been...
It sounds like Charles Payne would advance that.
Yeah. Look, both of these candidates have not been running the government as of yet. The biggest problem is what we have seen over the last 8+ years, a massive amount of debt buildup and markets that are completely addicted now to central bank intervention. They can never roll this back. There's a reason why a Fed head named Lockhart came out this morning, because they got worried about the market dropping on Friday. If one-day drop worries the Fed, look out. Unfortunately, we're going to be here for a long while until the markets say otherwise. And I have to make note, over the last 30 months, the Russell 2000 is flat, the NYSE is flat. This is including the fact that they printed trillions of dollars, gone negative interest rates, and actually bought up markets. Very scary thought going forward.
And I should say, actually, that the media was filled with reports of Mrs. Clinton's problems yesterday, but then the market went up today. So it looks like a potential Trump win is making markets go up rather than down, because they know his policies are going to be better for the economy, lower taxes, less regulation. Or
they could have interpreted it the opposite way, right, and said, well, it looks like she's going to be okay, or potentially, so we'd have no reason to fear it. I guess it's in the eye of the beholder. But as I'm speaking about that, we're learning now that the Trump campaign has signed on as its new senior advisor, foreign policy advisor, James Woolsey, of course, the former ambassador, a very big Republican honcho and respected by both Democrats and Republicans. But it continues more and more, Charles, I guess, formerly disgruntled or at least doubtful power brokers in the party that have now kind of aligned themselves back to Trump. What are we to make of that?
You know, it is interesting over the last month or so, as Donald Trump has started to rebound in the polls, watching the Never-Trumpers on social media get softer on their criticism of Donald Trump. Now, Woolsey is not. He was not a Never-Trumper. You know, he's a serious-minded kind of policy person who can speak without ruffling feathers. I think this is, again, a reflection of the Kellyanne Conway sort of thing. Let's bring in some reputable Republicans who have great long resumes and who aren't out there necessarily to disparage Hillary Clinton, but to argue what they know is factual, at least from their own work experience and their own philosophies. And I think that's a sea shift in the way that the Trump campaign wants to go, rather than having a whole bunch of surrogates who, you know, necessarily go out there, not necessarily with the chops, the policy chops, or the resumes that someone like a Woolsey's going to have.
You know, Dinah, we've started talking about those in the party, Hillary Clinton's party, who are getting very, very nervous about the way her campaign has handled her health issue and other issues, and this penchant for secretiveness that might take away a key weapon they've used in the campaign, for example, going after Donald Trump and his secretiveness with his tax records, et cetera. Did that just get neutralized as a result of all this?
Well, I think it did. I also think that it's clear, looking at the policies of both the candidates and the situation our economy is in right now, gross domestic investment down, slow GDP growth. We definitely need lower taxes, corporate tax reform, regulatory reform. That's what Mr. Trump is promising. Mrs. Clinton is promising the opposite, raising taxes, which is the last thing we want to do if we're going into a recession. And bringing it back to the Fed cannot be expected to handle everything on its own. We need fiscal policy, tax reform, regulatory reform to get the economy going.